Hi, welcome to another video from the Alternative Business channel. Making a video on something, it's a bit niche topic. It's about how to start a payments business. Payments in payment processing, FinTech business. Processing credit and debit cards, whether it be online, over the phone, or via typical chip and pin card machines, mobile phones, things like that. I've been in this industry for about 15 years. I had a business of my own for about 8 years in this, and I've worked for a few of the big banks in the past as well. It's a really popular kind of space in it, fintech and payments. It's growing and growing and growing. We saw, like, over COVID, the big shift from cash to cards, even more so. That was already changing anyway, as it was becoming more and more card. You go in a shop now, don't you have to queue up the bloody self-service ones? They're all card only. You get someone there buying a loaf of bread for £1 and they're looking for the card instead of just putting £1 in the machine. So it's all become about card payments. And as e-commerce businesses have grown, more and more sellers online, there's a constantly growing market for the facility and the solution for businesses to be able to accept credit and debit cards. So a lot of people have and business owners have traditionally thought that only the main big banks can provide these services. So they go and open a bank account with Lloyds or NatWest, whatever, and the person opening the account says, one of the questions, do you need to take card payments? Yeah, and then they set them up. The banks are actually typically fairly expensive on the rates. There's a transaction processing rate on every card that's processed, and a few other fees associated with it too. But people assume it's only the banks. But there's been a growing market in the last maybe decade or so for a model known as an ISO model, ISO. In the industry, known as merchant services card processing. It's full of acronyms. So this one acronym for this is ISO, which the banks or the providers call and use for an independent sales organisation. But being a fully accredited ISO, that doesn't mean that you're necessarily just a sales rep or a sales organisation, as the name would suggest. You can actually have a fully kind of integrated fintech business, financial services technology business, with your own payment gateway technology, software that integrates for like hospitality, like table reservations, things like that. There's lots of applications out there and software that you can license and resell, or have your own developed and build the plugins, the APIs, so that they work with other like EPOS systems and shopping carts and things like that. So the question I've been asked a number of times over the years is, how do you start your own payments business? Well, if you look at like the traditional way where you'd find the bulk of the business, if you're not going into a niche market, most businesses are going to be retailers on the high street, bricks and mortar, because there's loads of them. And I read some of that, there's about 50,000 new retail businesses opening every week in the UK. Of course, the proportion of them fail. We've got other ones going out of business as well in the meantime, but there's loads of retailers out there, and they all need to take card payments, whatever products or services they're selling. So they're going to need the typical chip and pin card machine like you see in every shop. You tap your card, contactless, whatever, insert your card and your pin number. If you want to have that kind of service to get lots of customers, and then add onto it maybe what's known as a payment gateway. Another acronym they use is a PSP, all of the nonsense, but it's a payment gateway is the proper phrase, and that's used as effectively a virtual terminal. So it's not a physical card machine where people tap the card, but if you think about it, if customers phone up, say you're renewing your car insurance and you do it over the phone, you phone your insurer and they go, right, can I take your card number, last 3 digits and all that, expiry date. They're tapping that into a virtual terminal. It's a web-based form, and all that is doing is processing the card payment in the background and sending it to the merchant, your insurer in that example, to their bank account, and it's taking it from your card, obviously. So you got the other thing a payment gateway does is it's a pay page for e-commerce sellers, so people who are selling online on their website or selling through, it could be something like Shopify that use their own payment gateways and integrates with a few other ones. If they're selling online, they have to have a payment page, which is a payment gateway, and that's for, again, processing the payments securely online. So if you set yourself up as an ISO, a payments business, you want to be able to provide chip and pin machines to your bricks and mortar retail outlets, and you're probably going to want a payment gateway offering for the virtual terms mentioned and the e-commerce things. There's a few other things you can add on to a payment gateway, such as something they call the pay by link. Typically in the industry they use an acronym rather than call it pay by link, they call it a PBL, but everything's bloody acronyms in this industry. But a pay by link, and what the pay by link is the merchant, your customer, can either text or email a unique URL that the system, the payment gateway, generates, that can either link to an invoice that copies over the amount that's due or the deposit due or something like that, or it can just be for a random amount the customer's entered. So it's a text or an email, goes to their customer, they click on it and enter the card details, they get an instant confirmation, payment successful. It texts or emails the card holder, the end user, a receipt, and it sends an instant notification to the merchant as well, the business, that the invoice has been paid or the deposit's been paid, whatever it may be. And these pay by links are quite clever. A lot of them can integrate with a lot of accounting software, it's like Xero, QuickBooks, Sage and things like that. There's a lot of integrations. So a merchant, a business, can effectively have an invoice, generate an invoice in their usual way through Xero, QuickBooks, whatever they might be using, and then just click send payment link and it'll text and email their customer the link. They can get paid straight away. A lot quicker than checks. Not necessarily quicker than a bank transfer, but with a bank transfer you've got to know, of course, that the customer sent it and check your bank account. With a pay by link you get notified instantly. So essentially you've got chip and pin card terminals and a payment gateway that does these three things I mentioned and a few others. They're the three core things. In order to set yourself up, you can't, at least in the UK, and as far as I know in the US and in Europe as well, well definitely in Europe, and I think it's the same in the US, you can't handle, even if it's your own software, your own technology, your own card terminals, you can't handle the actual credit and debit card funds that are being processed yourself. It can't go via your own bank account. You never see the actual funds, because they could very quickly become tens of millions of pounds a week going through there, and of course it's right for a fraudster to just take all that money and disappear to Portugal or whatever they do. To be able to handle the actual funds, you need to be accredited by the FCA, financial regulator, or the financial regulator in the relevant country. And you need what is effectively a banking license, and they are nigh on impossible to get. The regulators will ask for liquidity, as they like to call it, a cash reserve that you will often deposit with the regulator, that is an insurance policy. So if you decide to run off with all the money that's being processed, you might have £25 million or 30 million euros lodged with the regulators for as long as they deem fit. That could be years, could be for the lifetime of your business. So that's not going to happen. Even if someone's got 25 million quid to lodge as a deposit and to be held indefinitely, they're not going to do that, are they? Because that money can be invested and used in many other things. So you're not going to be the payment processor. In the industry, the payment processor, like the bank in the background, is called an acquirer, a card acquirer. I don't know why they call an acquirer, because they're not actually acquiring anything, but that's the name. So you need an acquirer in the background. In the UK, acquirers are the likes of WorldPay, which used to be NatWest and RBS Streamline, but it's separated now, separate entity. It's WorldPay. You've got Barclaycard Merchant Services. Obviously Barclaycard issue credit cards to consumers, but you've got Barclaycard Merchant Services, which is an acquirer who handles and processes debit and credit card payments for themselves and for ISOs. And so they're effectively taking the funds from the card holder and settling them into the account of the business, and the business is probably going to be your customer, i.e. the merchant. You've got Global Payments, which is like HSBC's payment processing arm. These are the acquirers. So you need a partnership, first of all, with an acquirer. There's a massive market for it, and lots of the acquirers their business models are built on this ISO, Independent Sales Organisation model. None of the acquirers employ field sales forces of thousands of people to cover every business in all of the UK or in the relevant country, whether it may be in Europe or the US. So their business models, they want businesses, payment processors, to set up an ISO model to go and be an exclusive seller of their payment processing services. So getting one, they're readily available, but they're not easy, because there's a lot of due diligence, and the banks, the acquirers, don't want to set up effectively every man and his dog as an acquirer. There are lots of people who've worked in this industry, been self-employed, commission-only reps for various companies, and they think, oh, I can go out and earn £1,000 a week self-employed. I wonder what I could earn if I was doing this for myself, rather than being a self-employed agent. So they're not interested in signing up everyone who's going to put through 5, 10, 15, 20 deals a week. They want serious numbers, and I think if you get a deal with an acquirer, they're probably going to want a minimum of 50 new customers per month in the first couple of months, maybe 100, and that's quickly going to rise into the hundreds. If you don't achieve that, then they'll just close the agreement and you won't earn the residual income that I'll come on to in a minute. So set yourself up. You need a partnership with an acquirer, and you need to know how you're going to generate the numbers that they'll likely want in terms of the number of businesses that you'll sign up every day, every week, every month. Think about aiming for at least 100 a month. That, if you've got a field sales force who are fairly competent, realistically you'd probably need 4 or 5 good full-time salespeople to generate 100 new customers per month. So that's obviously going to be a cost how you do it. You could spend a fortune on purchasing leads. There are lots of lead sources online who capture information, people looking for card machines and things, and you can bid to buy these leads in real time and phone the customer instantly, say, I see you were just looking for blah blah, and try and get in there. But there's going to be an investment, and there's always going to be some investment in a bit of technology they want to do, some due diligence. But let's say you've got all that in place. You've got your acquirer agreement with, let's just say for argument's sake, WorldPay. They're one of the big ones. So you've got your payment, your ABC Merchant Services Limited, whatever you want to call yourself. You've got your acquirer set up with, for example, WorldPay. They're going to handle all of your customers' funds in the background. Now, how the business works, you can now either purchase from the manufacturers your own chip and pin card terminals to either then sell or give or lease to your customers, the high street businesses. So let's say you buy machines. Initially they're probably going to cost you about 200 quid each. They do come down in price the more you buy. Let's say you buy a terminal for £200, you give it to a customer on an 18-month contract, you charge them £20 a month. That £200 investment theoretically will bring you back 360 quid over the next 18 months. But that's not where the money is. You could potentially give the terminals away. The money's not in that. And you buy a machine, that's just the cost of an acquisition of a customer. Where the money is in the transactions and the residual income. So your acquirer, using WorldPay as the example, might give you what they call a buy rate or a wholesale rate on the transactions. Now let's say they say to you, we'll just take debit cards as an example. Credit cards are different rates, but it's the same principle. Let's say WorldPay say to you, okay, for every debit card that any one of your customers takes, we will charge 0.3% of that transaction, plus a fixed fee of maybe 1 pence, which they call an authorization fee. So 0.3% of the transaction value, whatever it may be, no minimum, no maximum, plus 1 pence as an authorization fee. That's your buy rate, for example. It'll be something like that. You might get it a little bit less. If you then go and sell your services to your local butcher, for example, whether you lease him the machine, give him the machine, sell him the card machine, whatever, and you charge him 0.5% of each transaction value and 5 pence as a fixed fee authorization on every transaction, then WorldPay, as your or any acquirer that you use, will charge the customer each month at the rates that you've charged the customer. So they'll collect, in this example from the butcher, 0.5% of all of his transactions, plus the 5 pence as a fixed fee per transaction. That'll be the bill paid to WorldPay. And what WorldPay will then do every month is give you the difference back, that bit in the middle. So they'll keep their 0.3% and they'll give you 0.2% of all that money back each month. And that's an ongoing residual income for as long as you've got the customer. And they will keep their 1 pence authorization fee, and because you've charged 5p, they'll give you back the 4 pence for every transaction. Now I know these sound like tiny numbers. You're often talking base points rather than percentage points in terms of your revenue, but it's surprising how much even small businesses take on card payments. You've got even like local restaurants sometimes could be doing £1 million a year, 800 grand a year on card payments. If you're earning 0.2, 0.3% of that as ongoing revenue paid to you every month on their turnover, plus you earn a few pence on every transaction, it's surprising how it mounts up. Your average revenue per customer, I would estimate, will be anywhere from £600 to £1,000 per year. Depends, of course, how you price it, what your buy rates are, what you sell at, but £600 to £1,000 a year revenue for you per customer per year is achievable. So that's where it really adds up. If you now think, if you had, even if you're only getting £600 a year, if you've got 1,000 customers, you're now getting 600 grand a year revenue without doing anything else. So it's a very lucrative model, but it does cost to get started, because you need that field sales force, you need to get the numbers in order to keep the acquirer happy and keep you, and to not breach the contract you'll have with them. You'll have to negotiate terms at the beginning. Then you've got for example, a payment gateway I touched on. You could have your own built, your own tech, your own software, but to get it approved by the card schemes are like a Visa, MasterCard, Maestro, American Express, and so. For them to approve it, they're going to go through lots and lots of due diligence and like penetration testing, they call it, firing lots of transactions at your payment gateway, maybe thousands a second, to see what it can handle. They're going to try and hack it with their security teams because they want to make sure it's totally secure, and it's going to cost a fortune. You're probably going to run into a few $100,000 to build from scratch a payment gateway. There are lots of companies out there, however, not lots, but a number of well respected established businesses that have built payment gateways for the reseller market. So for these ISOs, and it'll be white labeled, so it'll be yours. So if you are ABC Merchant Services, you can go to someone like SagePay or CardStream, or a couple of reputable firms, who will give you might pay a fee up for it, might be a couple of grand, $5,000, whatever it is, and they will give you the payment gateway, which is fully branded in all your logos and names and things. You have your own customer support number on there, and you can have that up and running in a week or two. So you've now got your payment gateway to offer alongside your chip and pin terminal. So you can now maybe charge a customer who wants to sell online, you might charge them £10 a month, a fixed fee for the payment gateway, and then you charge them the rates based on your wholesale rate, a bit like you would the chip and pin machine, and get the residual income off that. So that in a nutshell is how you'd start it. You'd want a company like SagePay or CardStream. By the way, I'm only mentioning ones I know. This video isn't sponsored, there's no paid or sponsored content. I'm just familiar with CardStream. I've used them for many years. I'm familiar with SagePay, and I know they're good reputable firms as far as I'm aware. Obviously do your own checks and due diligence, but they've both been around for a long time. Or you could find others, there's many others out there. Just do a Google search for white label payment gateways. There's probably a few scams out there. A small company's not very good, but if you choose your own, so you can have that's your payment portal. That gives you like a back-end login to see how much all your customers are putting through, see the transaction amounts. The customer's got their own admin portal, they can see what they've sold online in real time, things like that. You need your chip and pin terminal provider. Ingenico is a big one in the UK. There's a Chinese company called PAX. In the last few years, they've just blitzed the market, and they're offering much better technology than the likes of Ingenico, in my opinion, in the opinion of lots of people in the industry. And PAX are offering cheaper machines that do a lot more. So PAX might be one of your favourite ones. The beauty with PAX, if you build your own software for adding things in there, like maybe for it to use as a till to take cash payments as well as a added benefits to your, as a selling point for you to sell to your customers, you can integrate your own software into the PAX machines and have your own logos on there, or branded as the customers, things like that. So they're quite good, which you can't generally do on the Ingenico ones. So if you want to start a payments business, you need to look at the money. This is one of the businesses that are going to take some investment. A lot of businesses don't cost much money to start. This is one that is going to take some investment, because you're going to need to find a way, whether it's through spending a lot of money on purchasing leads, or a telesales team, or a field sales team of at least 4 or 5 full-time people. You probably have to give them a basic salary, commission, company car, phone, laptop, all the other things. A salesperson could easily, with all the associated costs and employers' national insurance and things, and all the commissions, running a car, it could easily cost you $100,000 a year per person, easily, if not more. So there's some investment, but the residual incomes can quite quickly run into millions of pounds a year coming in. And the good thing is, if you got, everyone's going to have a rate of attrition. You're going to lose some of your customers along the way, because some people go out of business, some people change suppliers, they get poached all the time by competitors, some will close down, whatever it is. Let's say you've got a relatively good business, you're probably going to lose, I would guess, about 20% of your customers per year going to fall away for whatever reason. So if your rate of attrition is 20%, but you're growing, you're acquiring, so that might mean that you lose, I don't know, 20 customers a week. But if you're bringing on 100 customers a week and you lose 20, of course your business is growing. If your revenue at the end of year 2, for example, is 800 grand, and your rate of attrition is 20%, you know on the 1st of January, or the 1st of your financial year next year, that you're likely, based on your track record, keeping 80% of your customers, that 80% of that 800 grand revenue last year is going to come in this year without you doing anything. So in that case, 800 grand, 80% of that, you're going to get 64 grand, is it? No, 60, sorry, 60, what I'm saying, 680 grand revenue next year, based on, like, as long as your customers stay with you, that residual income carries on month after month, year after year, for as long as they're with you. And then you go and acquire just as many customers as you did last year. There's another based on that, another 800 grand on top of that 680 recurring revenue. So it's a very, very scalable business. There's loads of business out there, and it's very, very lucrative. I'm just thinking, my videos here are not scripts. I'm just thinking, I do the maths right, and I'm saying 80% of 800 grand. If you've done 800 grand and you lose 20% of that, then you're losing 160 grand, aren't you? So actually your residual income is 640 grand, should I say, on that. I don't know if I just said 620 or 680, but you get the gist. 80% of last year's revenue you can probably rely on is coming in this year. It's a bit like the insurance industry. If an insurance broker's got 1,000 customers and they know that every year on average 800 or 900 of those renew with them every year, they can predict what their residual income is going to be that year without even doing anything. And it's the same in this business, which is very attractive. They also have, if you come to exit and sell your business, they have very high I've forgotten the term now, but valuations, sorry, are very high valuations, because it might be somewhere between 10 and 20 times even, depending who buys you, your residual income. If you've got £1 million a year residual income, which isn't too difficult to achieve, I know you're going to have a lot of costs out, that's not all profit, but if you've got £1 million a year residual income and a solid customer base, that business is probably worth, just for the goodwill value, 10 million quid straight away. And then there's going to be some other assets you've built up and things. Could be worth 20 million, a lot, but so it's a high, somewhat significant investment up front, but residual income, which I think is always the best business model, and lots of end kind of the exit I'm looking for, the value, high valuation in the end. Sorry, I'm stuttering, can't get my words out today, I don't know why. High valuation business, and it's going to be very attractive to private equity firms if you want to go down that route, or just to sell to acquirers, the acquirers, like the banks. People like Global Payments, which is HSBC's acquiring arm, so to speak, have gone out and purchased, or actually acquired in the real sense, lots of other independent ISO businesses in recent years, and some of these have been for hundreds of millions. So it's a great business to be in. It's very competitive, as you would expect. Of course, anything that's so lucrative in the massive market is always going to be very competitive, but there's a ton of business out there. You could partner up with some kind of EPOS till provider to offer like an integrated or joined up solution to make your offering more attractive. A lot do that. So you find, I'm not recommending them because I don't know how good they are, but someone like EPOS now is one of the big ones. They provide those touchscreen till systems that do stock control and everything else, and you get the cash draw. If you can get an integration where your machines plug into theirs, you might be able to sell that along with it and earn a commission on that, and it's a bit stickier for your customers. They'll stay with you longer, because they're not just going to change the card machine because another rep comes in and offers a slightly better rate. They're going to be tied in with your till system and everything, so it makes it a lot better. That's about it in this video. I know that there's going to be a bit more to it than that, but in a nutshell, that is one way how you could start a payments business, fintech business, and grow a very, very scalable business. Thanks for watching, and I hope you found the video useful. If you do, please comment, share it. Any comments, good, bad or indifferent, are always welcome. And if you haven't already, then please do subscribe. I'm going to want to keep lots of informative, helpful videos, many as I can. And they're slightly delayed. We've got some really good podcasts coming up, some really prominent business figures. Should have been doing them last month. There's been a bit of a delay, but please do subscribe, and they'll be coming in the near future. Thanks for watching. I'll see you in the next video.